Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire, Hathaway HomeServices, California Properties. Another Monday market moment. The first Monday in the last quarter of the year. We're in the fall real estate season, and um, looks like lower interest rates are equaling a somewhat of a fall rebound. So we'll talk about that in just a moment. Let's look at the latest stats. Right now, we have 5,017 homes for sale in San Diego County. It's a drop of 13 from last week, with a median list price of 975, no change. Average days on market, also no change, 47. Pending sales, 2258. We have 5 more pending sales than we did last week. Median list price of 890, lower. Average days on market, 32, no change. Months of inventory did go up a little bit. We had seen a decrease, now a little bit of an increase to 2.78, still below 3 months, which is still considered seller's market territory. Here is the chart showing total actives and total pendings. You can see how perhaps we did peak a few weeks ago in inventory because we've been declining ever since, in pending sales jumping up a little bit. Last week, 809 homes came on the market, 21 more than the week before, with a median list price of $900,000, higher than the week before. New pendings, 372, 31 fewer than last week. Median list price, $899, 450, lower than the week before. No change in the average days on market, 29. New pendings listed within the last week, 13. New pendings listed within the last 2 weeks, 122. 3% of homes are selling in a week or less, and about a third are selling in 2 weeks or less. How many homes closed escrow last week? 368, just 2 fewer than the week before. Median list price, $899, higher than the week before. Median sales price, $888.5, higher than the week before as well. Average days on market, 29. And the least expensive sale was a condo in San Diego, $205,000. And the most expensive sale was in Santa Luz, kind of near Rancho Santa Fe, east of Rancho Santa Fe, for $8 million. Here's the chart showing new listings, new pendings, and new closed sales. We did see a slight increase after a few weeks of decrease in new listings, and a decrease in the number of new pendings, even though the total actives was lower and the total pendings was higher, about the same number of closed sales. Looking at the median list price and median sales price, we did see a little bit of a rebound. For 3 weeks in a row, we're seeing the median list price higher than the median sales price, maybe an indication that buyers are looking for a little more discount than they were before, and sellers are giving it to them. So here's the Stephen Thomas reports on housing showing the total active listings year over year. And you can see how we've crossed the line of 2022. We have more homes on the market now than we did last year, the year before that. So we have more homes on the market now than since before COVID. You can see we had many more homes for sale at that time. So we're still lower than that. Meanwhile, the demand is bucking the trend. You can see all the other lines for the last few years on a downward trajectory, but look at that little spike that we're seeing right now in demand, number of homes that went pending in the last 30 days. Why is that? Well, Stephen did a great comparison, end of September comparison, this year versus the year before versus the year before, and it all comes down to interest rates. The 30-year mortgage rate a couple years ago was 6.69%, so the payment on a $1 million home with 20% down was $51.57. Last year, the rate was a lot higher, almost a point higher, 7.61%. And so the payment was $56.54. Affordability was squeezing people out. $300 a month more was squeezing people out, and demand was lower. But now, with the rate of 6.21%, that's the average 30-year rate, that payment is $49.05. So for the same $1 million loan, or home rather, $800,000 loan, people are paying couple $100, $250 less now than they were a couple years ago, bringing people out to the market. And the demand, you can see the pending sales were 1916 a couple years ago. Last year it went down to 1574 because of that rate increase, but now we're at 1801. We don't have as many pending sales now as we did a couple years ago, but we're seeing a lot more than last year. This was interesting too, the 2-week change in demand a couple years ago. 162 fewer pendings on 9/29 versus 2 weeks prior to that. So you can see that downward trajectory in demand a couple years ago. Last year, 3 fewer pending sales than 2 weeks before that. But look at this year. We have 110 more pending sales now, 7%, than we did 2 weeks ago. Kind of a sharp increase that we saw in that chart. And the 2-week change in expected market time, kind of the same thing. Market time was going up a couple years ago. Last year, market time was about the same as it was 2 weeks prior. But in the last 2 weeks, we saw 5 days come off the expected market time. So definitely seeing a fall rebound because of interest rates and affordability. And here's the breakdown of the market. 30% of the current inventory is the price point of 0 to 750. 33% of the demand is in that category. Usually you see a bigger spread, much more demand than inventory, but it's pretty close. Similar up to $1 million, 28% of the demand versus 23% of the inventory, 13 and 11 for the higher price point. And then it's kind of break even in that 1.25 to 2 million category. But you can also see the average days on market last year for the 1.5 million to 2 million. It's about the same as the days on market, expected market time this year. So interesting shift right now. We're not used to seeing this with inventory. Maybe have already peaked a little bit later than usual, but demand going up a little bit. We'll see if that trend continues as hopefully rates keep coming down. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions about this report or any other numbers, how it might affect you, give me a call, send me a text or an email. Be glad to help. Otherwise, look forward to seeing you next week in the next Monday Market Moment. Have a great week.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this report, please send an email to Bryan@DevoreRealtyGroup.com.